Hello, everyone. Hope everyone's had a good week and is having a good weekend. So, I'm going to recap the previous week. A lot of what I'm going to say can be found in daily reviews. This is going to be a more condensed version. I'm going to talk about it a little bit more. But I'm going to start with Sunday, just my analysis. Very simple for the dollar. I have this buy side liquidity up here, and I expect the dollar to continue going higher. There is a nice weekly fair value gap that is visible there above the monthly fair value gap. And at the beginning of the week for the stock market, right, I'm noting how the IPDA 60-40-20 day is in a big discount. Right, if we look back 60 days, we have no lows to go to, so we only have the highs. So that could ask for some consolidation or a retracement into premium. That's what we saw this week, a retracement into premium. And I'll go to now Monday. Right, Monday we started and I noted this new week opening gap. So as Monday opened up, gapped up higher, we had some price action that had not seen any trading. And so price, before rallying higher, traded down to that price action there. Okay, you see the Nasdaq quickly running up back above this triple top formation one more time at the 9:30 open. That can happen sometimes. And once the 9:30 open kind of clears off, around 9:45, you would have had a great time looking for shorts above the midnight and 8:30 open. So that's a 5-minute breaker that's formed after the consolidation. You see the price quickly runs up above the consolidation at 9:30 open, creates that breaker, and rejects lower. Right, so as it's rejecting lower, there's a nice 30-second fair value gap. This is the 1-minute chart, but you could have went short in there. Saw a real nice rally lower, and this is where the bullish breaker starts to form, which is the second stage of the distribution for the sell curve of the market maker buy model. And then you get another 30-second gap, which brings price up above the breaker, now finding support. And this is the second stage of the market maker buy model, which continues to run towards buy side liquidity. Now, we don't always have two stages, but usually you kind of want to see a second stage for most of the time before running up. Well, yeah, you don't always see two stages, but you want to have a breaker. So sometimes that can be the first stage. It can dip below and it can run back. But you want to have two stages most of the time on the first curve to form both those breakers, which will be used for the majority of the move, which is the second stage, which is going to run real nice and fast past the buy side liquidity, usually expanding past it. And I'm just showing the 30-second chart here, that nice price action. Okay, notice too how price was consolidating, and it started to move around 10:50 to 11:10. You see the volatility sort of was like injected, and we saw a nice run on a manipulation run before giving us that price action, which started to go higher. I said 10:50 to 11:10, right? Yeah. So now Tuesday, nothing really happened. Tuesday, this was again when I said I wanted to see Wednesday potentially make the high and start to go bearish, and then Thursday and Friday continue going lower, moving back into the week or just consolidating, right? Because this is just above premium. We ended up closing at this level, so I'll show that. I talked about Tesla's earnings. Now this could be seen as an investment into the company. This may not just be because of the economy. It could just be because Tesla is investing in robotaxi and other technologies, because they're starting to shift from electric vehicle to a tech company, because I think that Elon Musk is a smart man, and I think he knows that electric vehicles are never going to replace gasoline vehicles, at least not in a very long time. And I think that there's much more efficient energies that can be used to make electric vehicles, like hydrogen, or not electric vehicles, but just vehicles like hydrogen or nuclear energy vehicles. So I don't see a future in Tesla, and I don't see it replacing gasoline anytime soon. But this is why I think they're kind of shifting towards a more tech company, and that's why they have lots of intangible assets that they're buying, and that's why their earnings are off. The revenue, obviously, that's because of the economy, probably because less people are buying cars, especially Teslas, right? But anyway, you have the Tuesday, which this is at the end of the day. It just expanded higher. 9:30 open there, dug lower. Fair value gap there on the hourly chart. That is a discount if you go from that swing low to that swing high. And we quickly run up for Tuesday. Very quick. Now, after this quick run up, to me, I was thinking, okay, that sets up perfectly for a reversal because we haven't really seen too many big moves lower. So I know a lot of people are buying in on this, and I think we might try and scare people to introduce more volatility, because I don't think many people are buying after this historic move lower. Right, so we had a down close candle, and that day I was pretty much all over this day. Right, I would encourage you to go watch the video because I explain it more in detail. But right, this is a turtle soup. So you have this high, low, that's the bearish breaker. And when we came up above this high there, I was more seeing this as still a consolidation. I didn't really see this as a move that sold the idea to the market that we have broken this high and we're going to be bullish. So I was looking for another run, and also time. It's not 9:30 yet. So when 9:30 came out, we ran up above it, way above it. And this is where I show it. See how we're way above it. We continue one more time, make a new high, and then price quickly starts to move away. Okay, I'm looking at back here down to discount underneath that low inside new week opening gap, and there's an hourly order block too, which I don't really show. I'll show it later. So after we reject it, we initially reject and we leave an order block. Price comes back up to that order block. That could be another shorting opportunity. I saw this 30-second gap and I went short on it. Screenshot it a little bit late. Comes back to it with the 5-minute order block being traded to. And price leaves that. Runs down to the order block. In the afternoon, I called this. This was pretty simple because I knew that order block here, which I show, I watched how price closed to the low of it, and so I knew it would be broken. When I saw lunch consolidate and close up, I wanted to see if people had bought this dip, and price went up against the order block and stopped them out before it actually went higher on Thursday and Friday. But I was expecting price to actually, on Thursday and Friday, I was expecting it to go up, but it didn't. And, we had GDP growth rate come out, which is very bad, by the way. I talked about this, how it was 3.4%. They forecasted it, the numbers, the range in which they wanted to see it was from 1.7 to 2.8. So that was the range, and they ended up deciding 2.5. It came out at 1.6, which is underneath the range that they had predicted. So this is even more bad. This is showing obviously there's a big decrease probably in spending, which would make sense. So because inflation's out of control. And the CPI that they're showing isn't really true. They're hiding a lot of the inflation that is actually occurring. And finding ways to lie about it. That's why the CPI is always delayed and is flawed. It's not reliable. but the market loves to react off of it. It's very irrational. Now, I'm also noting some SMT here. So the Dow, obviously a lot lower. That's something I was noting and watching. It's still, I thought that maybe we had early shorts, and then the Nasdaq came back above this to stop the early shorts out. Like me, if I would have held, and now it was going to go lower Friday into Thursday's range, but no, it did not, or Wednesday's range, it did not. Instead, Friday continued to go higher. But before we move on to Friday, we had yet another market maker buy model, right, with the sell side curve over here running down into a discount, and we formed the second stage with the breaker here, and we run up. We don't really have a decent second stage, but this is Thursday what I saw, and I pretty sure I made a video on Thursday, but I saw a tight range during Asia and London leave quite a big range. Now, if you compare London to the previous London sessions, it doesn't really look like a huge range. It's definitely bigger. It's definitely bigger than some of the other London sessions, like this one from Monday and Tuesday. However, it's more about how the bodies and the candles look. I can see there's obviously volatility. It traded to Asia low and high, and it displaced past the highs. So there's not much liquidity here overnight, and we end up dumping at 8:30. So I knew that it was done. Price was gonna try to reverse, but when did it do that? At 12 o'clock. So we had this big candle here I'm highlighting into the new day opening gap above midnight open at 12 o'clock, and that's after the AM session sort of consolidated, and that's when price was in a better condition to move. So when you see Asia consolidate and London leave a big range, you often want to wait until 12 o'clock before looking for any trades. And then basically that's what happened at 11:50 to 12:10 macro, which is a session passover, the from one session to the next. It created an order block, started to run rapidly, small fair value gap you can buy off of an order block, and then runs from there quite aggressively. So Friday, there's not much to talk about Friday. I was looking at consequent encroachment all week of that candle. Maybe if I go to this, you see CE, and we did close exactly on the consequent encroachment. So I like that. It's pretty cool. But I'm starting to question the state of the market right now, because we have Powell speaking next week, right? The news that we have non-farm payrolls, and then the press conference for the interest rates decision on Wednesday, and we have Wednesday news in the morning. So Wednesday is going to be a very scary day, and Friday too, with all the news we have. I don't expect much Thursday. Should be a pretty dead day, and Tuesday. Monday could be good as the week opens up, but it'll be very interesting to see what happens, because the thing is, I think the stock market is overvalued and is due for a big decline. But I don't think that the Fed is just going to let that happen. I know that if the Fed if they really want to, they can keep the stock market and all other assets in the United States, like house prices, high. They can keep them high and not have to raise the interest rates, right? The way to do that is you just print more money, you tax the people more, or you force other countries to buy your bonds and your assets and your stocks, and basically make the other countries want your dollar. How do you make other countries to want your dollar? Well, you produce a lot of stuff, and you make them want to hold dollars to buy your stuff, because other countries probably want to hold your dollars to buy your stuff too, so other countries can trade with each other in dollars. But if that's not happening anymore, no one wants the US dollar, well, the US is kind of by themselves, and they'll need to either tax their own people, or raise the taxes. Now, sorry, tax more their own people or print more money. Now, if you print more money, there's inflation and people will eventually not be able to buy anything. And it'll be like in Argentina and Venezuela, right? And in either case, I think there's going to be a revolutionary war if that happens. So the best option is to force other countries to buy your things. And I think the United States is in the best position in the world to do that. I mean, they spend 45% of global defense spending, and anyone would be stupid. I think China accounts for 15%, and Russia is like 3.5%. So anyone would be stupid to go up against the United States in a war, right? In the United States, not just them, but they have all of NATO and a lot of the other first world countries like the UK, the Europe, and other countries like Australia. So U.S. is a very, very big boat of power, and if they want to keep the stock market up, I think that they really can. We might see a small crash. This could continue because the dollar could continue going higher. And I think that when the dollar reaches, I have it inversed here, when the dollar reaches, as it continues to rise higher, which would make harder for indexes and other assets to move higher, which could see them continue moving lower. I think we're going to see a lot of stuff sort of happen at this buy side liquidity. Maybe countries will want to move away from the dollar more and more, and the United States is going to want to go after them or something. I don't know. To distract everyone from it, we're also sending people up to space in November. And last time we did that and we sent people to the moon, there was stagflation. So I'm also seeing a lot of media people talking about stagflation. And I don't know if that's just my phone listening to me. I don't think so, because I'm seeing it everywhere. But it is a worry on a lot of people's minds. And I think that if the Fed is smart, they're going to take everyone out of their shorts and just send the index higher. Because I'm looking at this stock market and I think a lot of people are short. A lot of people are talking about stagflation stocks. I'm seeing a lot more people sentiment being bearish. So it's sort of telling me that, I don't know, we could maybe continue seeing lower prices back, maybe down to that low. But I noticed something on the bonds. A friend of mine pointed this out, and he showed the bonds were making lower lows, right? While the indices were not. They're making higher lows. So that right there could be alarming, because that's intermarket S&T. And it's not like the NASDAQ needs to catch up or anything. It's literally the bonds on Thursday went lower while the NASDAQ went higher, literally. The Dow was more like the bonds. So this could be intermarket, manipulations between market, where we're sort of starting to shift. And at the same time, the 5-year has taken out liquidity at this low there, which could see a small retracement and leave this as a pool of liquidity for the future. So we could be seeing a further retracement. I think we could be seeing a further consolidation for the indice. If you look at this week, you see how it pushed up against this candle. Now I know the Fed is speaking next week, and NFP and FOMC, and they could say some alarming things that could make the markets crash and stuff. But we've seen Tesla have bad earnings, and look at Tesla. It's only been going higher. And again, I think that could be the narrative. Look at how bad their earnings were. It could just be they're buying intangible assets, and you'd have to obviously look more at its price to booking ratio and all those other valuation metrics about what they're really doing and what the CEO is saying about Tesla, right? But it's oftentimes hard to understand sentiment based off the news, it could be confusing. One thing I can tell you is that I've always looked at price action and found it much easier, right? And I'm looking at price action and I'm seeing how the previous week for the NASDAQ pushed up against this current week here. And it's also the Dow is making those lower highs, which is not really what I want to see. And with this push up, it's showing me that we're a little bit more bullish and we could just be held down as the dollar's rallying higher. Now, that doesn't mean we're going to have bad trading conditions. Maybe we'll move down slowly, but I don't think we're going to see a big crash soon. It could happen again. I don't know. It could happen that we're going to see a big crash. But it's not anything on my mind just yet. Like for sure, 100%, I'm confident about it happening. Right, but that was all.